If you go and take $30,000 out of this policy and you're borrowing it from your policy, you're going to actually pay it back over the course of time. Your policy is still building cash as though there's $100,000 in there, not as though there's $70,000 in there. The advantage to having an infinite banking policy and being able to borrow from yourself as opposed to having to go to the bank and take a loan out from the bank is, one, the loan's going to be 0% interest in most cases, borrowing from yourself. If you go to the bank at this point in time, it's going to be like an 8-10% loan on there, and the interest on what you're paying on that house is just astronomical. You wanted to go get a car, for example, and let's say this car is $20,000-$30,000 and you got $100,000 in your participating whole life policy. Well, if you go and take $30,000 out of this policy and you're borrowing it from your policy, you're going to actually pay it back over the course of time. Your policy is still building cash as though there's $100,000 in there, not as though there's $70,000 in there. So you're actually still getting the interest on that $100,000. So your money can actually grow faster, and you're paying this loan back that you borrowed from yourself at a 0%. So you're a little more flexible on being late paying yourself, so to say, even though you are going to put that money back into the policy. Now, the disadvantage to going and borrowing from the bank is 8-10% interest. That's really going to add up over time, and that's going to undermine your opportunity to go into other things, when if you could have just borrowed from yourself first, if that was an opportunity for you. You know, a couple of things, the scenarios where this just doesn't work out for you is, one, you know, you don't have any cash to put into a policy to jumpstart it, and two, you're not willing to fund it each month and tuck something away for your greater future. But if you are trying to build a nest egg, you already have started a little nest egg, you want to grow that nest egg, but know you could potentially need access to it at some point in time, you have the ability to still be getting that compound interest on your principal and the amount you have in there, but borrow from yourself and have access to that money. Many advantages to a participating whole life policy. Just to name a couple more is a critical illness rider, a terminal illness rider, a chronic illness rider. This would pay you in the event that you became ill or injured, or you got some kind of illness that debilitated you from being able to go to work. There's terminal illness that would actually pay out 80% of that money in there in the event you acquired a terminal illness and they said, hey, you're gonna die in the next 12 to 24 months. They would advance you 80% of that money. So just of your death benefit, by the way, not just your cash value. So there's many advantages to going with this. If you medically and financially qualify for these vehicles, you want to learn a little bit more on how to do this, then book a call with us. We can cover an illustration based on, you know, what you would medically and financially qualify for, and get you some more details on that. We look forward to speaking with you. If you like this kind of content, especially if you're getting ready for retirement, these topics about annuities or finances are important to you, don't forget to subscribe to our channel, hit that notification bell, drop a comment down below, let us know what you want to see more of, and we look forward to sending our next video out to you.